Bismillahirrahmanirrahim, dear students. Today we'll start chapter number 9, which is associated with the accounting process and accounting issues related to plant assets. That is actually the fixed assets. Secondly, in natural resources. The resources which are being naturally provided by God, and we are extracting it or using it, and intangible assets, those assets which are there and they are benefiting us, but we cannot see through its eyes or touch through our hands. And how we are going to record information and certain issues related to these assets. Starting with this chapter, we have to be very certain that when we are recording accounting information, it's very important that we should follow gap principle, that is generally accepting accounting principle, and there are certain gap principles which are associated with all these resources. We have discussed the current assets and different aspects of these current assets, and what type of corrections, adjustments, and all these things we have to do while we are recording current assets that are actually the working capital of the organization. But we cannot ignore the actual beneficial investment which is being done in these assets, and these are the resources. These are actually mostly the resources are these resources are used in long-term benefit of the business, and the business cannot exist without these assets. And every organization and every type of business have different kind of aspects of different assets. Certain companies use more of a fixed asset, certain companies use more of current assets, certain companies which their bases are from in natural resources, and some of the case in some of the cases your intangible assets play a very vital role. For example, when we talk about patents, so patents are those kind of rights which are being acquired by the companies which have invented or discovered a certain formula or certain kind of thing, and they want to restrict the production of those things from the other company, so they'll acquire that. So for a certain time period they will provide you benefit. So in the case of plant assets, we will be more associated with recording depreciation and seeing that how these kind of assets are getting obsolete or getting depreciated with the passage of time, and how we will record depreciation. But as we have different kind of fixed assets, so we have to see that the different type of methods can be used while we are recording depreciation, and we'll be using different methods for recording depreciation, and we'll be discussing all these methods one by one. Secondly, in case of natural resources, we use depletion. That means, as these are the resources which with the passage of time, when you are using it, they are going to be extinct. So we are using depletion concept in case of natural resources, and in case of intangible asset we are actually using the concept of amortization, that with the passage of time they are being amortized. We are getting benefit a certain time with these assets, so with the passage of time this benefit is actually going down. So we can use amortization in the case of intangible assets. The learning objectives which are being invested in the business for a longer time period, and historical cost principle, because following historical cost principle. And what is historical cost principle? Just that we should record the price or the value of the asset according to its exchange price, or the price which you have actually paid for that asset, regardless of their market price. But only marketable security has departure from cost principle, historical cost principle. Secondly, explain and how to compute it. As we already know that we cannot record the expenses, because expenses of your we are using these assets, and in order to contribution into that sale, we can use the depreciation. Is that with the passage of time you are using efficiency of that asset decreases, that we have to determine the depreciation. In the previous chapters, more probably in financial accounting one, we have discussed a straight line method of depreciation, but that method cannot apply to all kind of asset. We have different kind of asset in your business. So depending upon the nature of your asset, we can modify, we can use the depreciation method. So mostly we can use four type of depreciation method, and we'll discuss these four type of methods in detail in this chapter. Thirdly, distinguish between revenue and capital expenditure. Revenue expenditure are those expenditure which are done for the purpose of generation of revenues, and the time period of these expenses are the beneficial, or you can benefit they can provide is less than or equal to 1 year. And but in case of capital expenditure, these are for the longer time period, and these are investment in your long-term asset, and they will benefit you the business for a more than 1 year and for the longer time period. And we have to determine and explain the entries for each kind of different asset. Fourthly, explain how to account for the disposal of a plant asset. As we are already discussing that with the passage of time, when you are using your fixed asset, it become obsolete and it have to be replaced. So how we can dispose that asset and how we can replace that asset, or with different type of trade-off and all those entries, we'll discuss those entries in this chapter. Then other learning objectives are compute periodic depletion of extractable natural resources. As we have discussed that we have different kind of asset. Sometimes we have natural resources as our asset. So in that kind of asset, we cannot use the concept of depreciation. We can use the concept of depletion, because you are extracting these natural resources, and while you are extracting these natural resources, they are being depleted. So we can use depletion concept instead of depreciation expenditure in case of extractable natural resources. Sixth, explain the basic issue related to accounting for intangible asset. We have different kind of intangible asset as well, like for example patent, goodwill, all these things. So these intangible assets provide us benefit, but in this case we can use the concept of amortization, that the benefit they are providing will decrease with the passage of time. So what kind of entries we will do in case of intangible asset, and indicate how plant asset, natural resources, intangible assets are reported in the balance sheet. Because in the balance sheet, and because these they all these assets are reported on the balance sheet. So how, what kind of thing we will kind of thing, just for example, when we talked about the resource, the fixed asset, like for example land, building, and so on. So we will report on the book value and show all the other asset like depletion. So what kind of entry we'll make, and what kind of deduction we'll make, and report it on the balance sheet. So we will discuss all these things in this chapter. Looking at the preview of chapter, we have to deal with different kind of plant assets, or you can say fixed assets. You have natural resources, and then you have intangible assets. So first of all, asset. So first issue is, while we are recording information into your accounting records, is that we will discuss later on that when we have to ascertain their freight charges and all those things, return and also when you are using this asset, you have to determine the periodic depreciation asset, then revaluation of your plant asset, that how you will determine upon it depending on different issues. Then you are making expenditure on it, we are in making maintenance and all those things. So we have to determine then last thing is that once the plant asset will dispose it off, and how you will make it. Certainly you can, certain times you can dispose it off, or certain time you can trade it off, and what are type of issues regarding that. Resources, the major issue of natural resources is that you have to discuss the depletion of these natural resources, that you are extracting these assets, so obviously they are depleting. To discuss this. Thirdly, intangible asset, that what type of asset. Then research and development, like for example patents. Mostly we are talking about patents in this case. So you have to make research, and you have to have formulas and all those things. So what type of expenditure, or what type of expenses you are doing in that, so you have to determine that. Or where you can these portion of your balance sheet, then useful you are getting from them, and also all those things. So this is the major presentation of your or you can say preview of chapter number 9, which, and then we can say how you can discuss these different aspects in this chapter. Okay, start. So plant asset, or you can say fixed asset, are the long-term resources of the business, like machinery, like building. Are These are the resources. But when we talk about their shape, so they have a physical substance. That means you can see them with your eyes. They have fixed shape, they have fixed size, and they are those resources which are provide you benefit for the longer time period, and they are used in the operation of the business. They are very essential for the business. You cannot the business without these assets. You use these resources, you use these assets in order to operate your business, in order to perform the business activity, which are not there in the business for further sale, because you actually these assets which are called as your physical asset, they are not being purchased, or they are not being incorporated in the business in order you're selling your business, or you are liquidating your business, or you actually, if you are selling it, that means that you are replacing that asset with some other asset. Actually, there you have the intention is not further sale, but intention is that with the help of these assets, you can generate expected to provide service to the company for a number of years. That means that you asset which are being intended for further sale, and you use those assets for further sale. These are the assets being used in order to produce different type of asset, though all those working capital are being taken, and with the help of these physical assets, you can say version of these assets into finished goods, and then make them for further asset which you provide the services to the business, and these services are for the longer time period. When we talk about capital expenditure, so the capital expenditure are actually being which is actually okay. Now when we are making records, or and making entries into the journal, the first issue regarding the plant asset is that we have to properly determine the cost of plant asset. So in journal, when we talk about companies, so we record all the plant asset at their cost, but we have to ascertain that what things are included in that cost. But as cost consists of all expenditure necessary to acquire an asset and make it ready for its intended use. What does this mean? That means that you have to have some inbound logistic expenditure. That means that you have to incur certain freight charges or transportation charges while you are taking that product from your seller to your warehouse, or to your place of business. Secondly, you have to install that assets, you have to take license and all those things for using that asset. So all these things are included in the actual cost of that asset. So when you are determining the total cost of that asset, you have to ascertain or address all these issues while determining its total cost. There are different type of asset. First of all, when we talk about a plant asset, the first asset we talk about is your land. So land is a kind of asset that has certain issues. For example, all necessary costs incurred in making land ready for its intended use. That means all those costs which are being incurred in order to prepare that land for making it ready for business is actually recorded in that cost. So we have to debit the land account. You increase debit the land account while you are purchasing that asset, and credit the amount of the expenditure you are incurring on that asset. So cost included in, for example, the components of the total cost of that asset is, or land is, the first is your cash purchase price. Secondly, closing costs such as title and attorney's fees, because while you are purchasing your land, and from it is a property of some other person while before your purchase, so you have to have acquire an attorney which will help you to transfer the title and all those things. Then real estate broker's commission. Obviously, while you are purchasing any kind of land and any kind of any other property, so you have to consult a real estate broker, and real estate broker work for their commission, so you have to pay that commission to their broker as well. So this is also the component of that purchase cost. For accrued property taxes by the purchaser, any accrued property tax, and if it is being agreed upon that you have to pay all the property taxes though which are being accrued in the previous period, so you have to pay those accrued property taxes as well. And demolition and removal cost of existing building. Obviously demolition means that you have to remove any kind of installation on that land. If you are using that plain land and you have to make your own building, and if you have to use make it prepared in your own way, so you have to demolish the any kind of installation on that building, that land, and any kind of building or any kind of construction on that land, so you have to incur that cost as well. So this amount is also included in your cost while you are making the land ready for your use. Okay, now with the help of this example, you can clearly ascertain that how you can determine the cost of your land. For example, a Liu company acquires real estate at a cash cost of $2 million. The property contains an old warehouse that is raised at a net cost of 60,000. That means you don't need that old warehouse. You need a plain land because you want to install, you want to have your own installation. So you have to remove that warehouse as well. Then 75,000 is the 75,000 in cost less 15,000 proceeds from the salvage material, or whatever the salvage is, whatever the demolition material is. So all you have, while you sold that, you have 15,000 proceeds, but actual cost incurred on the demolition of that is 75,000. So additional expenditure are the attorney fees, which you have acquired in order to transfer the title of land to your name. So that was 10,000, and the real estate brokerage commission is 80,000. So this is the total, and you have to also incur this cost as well. So determine the amount to be reported as the cost of land. So you have to determine the total cost of that land by determining all these aspects of your purchase. Now look into the solution of this question, in which we have to determine the total cost of our land. So in this thing we will actually consider the actual cash price of that property or land, and the cost which is being incurred on the disposal, on the removal or demolition of any kind of construction on that land. And we have to adjust it, so we see that what is the net cost, as there are certain certain proceed which we get from the salvage, or can they from the wreckage of that construction. Then attorney fees, which has helped us to buy that building, and transfer of title of land, so that is also included. And the last thing is the real estate broker's commission, so we have to pay him this commission. So this amount is also included into the cost of your land. So first of all, the price of your property land is 2 million. We'll add the net removal cost of warehouse, in which we have deducted 15,000, because the total removal cost was 75,000, but we get 15,000 proceeds from the from selling the wreckage of that constructions. Then attorney's fees is 10,000, and the real estate broker commission is 80,000. So the total cost of the land is 2.15 million. And we will record the entry into the journal, because the first entry is in your journal when we are recording information into our accounting records. So land is your asset. The land would be debited with 2.15 million, and cash would be credited 2.15 million if you have paid in cash. If you have promised to pay the amount in future, and you have signed a note receivable, so in this signed a note payable, so in this case you will have to write a notes payable, or if a notes payable or accounts payable, whatever the cases, because it is a large amount. So in this case, obviously they'll try to have a note payable. Another thing is your land improvements. Land improvements is any kind of activity, any kind of construction you have done, or any kind of improvement you have done to the land. So it includes all expenditure necessary to make the improvement ready for their intended use. For example, you can make a parking lot, or you have actually constructed a false building, or a false railing, or and all these things. For example, driveways, parking lot, fences, landscaping, and underground sprinklers, or a limited. But these it is, you have to also consider that you don't determine depreciation, or you don't calculate depreciation for land. But as these land improvements have a limited useful life, therefore you have to consider depreciation in this case. So you have to consider depreciation expense for this kind of asset. So expense depreciate the cost of land improvement over their useful life. So obviously, when you are considering depreciation, so you will not calculate depreciation for land, but you have to consider depreciation for land improvement, because these land improvement have limited useful life, and with the passage of time they depreciate, and you have to make improvement into that. So you have to determine depreciation expense for land improvement as well. So you have to consider that as well. Another fixed asset is your building. A building is a very important asset, and as compared to land, building has a limited useful life. So you have to consider depreciation for building as well. But first of all, first aspect is that you have to consider all costs related to directly to purchase or construction of building. So you have to consider all those costs. So purchase cost include purchase price, the closing cost, that is attorney's fees, title insurance, etc., what we have considered in land as well, and real estate broker commission. Mostly all these things are also included in the land, so these things are also included in the building. But apart from that, you have to make a building ready for your intended use, because you are using that building for your specific purpose, because you are using this building for your business, and you have to arrange, or you have to remodel your building according to your usage. So you remodeling and replacing or repairing the roofs, floors, electrical wiring, and plumbing are all part of your construction or your remodeling. So you have to consider this construction cost as well. Then construction cost, contract price plus payment for architects fees. And so first thing for the remodeling is that the building is already constructed, and you have make certain changes in that. But in case of when you are constructing your building, so construction costs include that contract price plus payment for architect fees, building permits, excavation cost, interest costs incurred to finance the project, and all those things should be included. And there will be lump sum cost, so you have to consider that lump sum cost in order to determine the overall cost of your building, which you have to enter into your accounting books. And then as next asset is your equipment. And equipment are those things which have a long life, or which you for use for the business for generating profits. And they include all costs incurred in acquiring the equipment and preparing it for use. Obviously, just like building, your equipment is being used in the business, so you have to purchase this. That will be their actually purchase price. And the second thing is that making it fit for usage in the business. So this cost includes cash purchase price, obviously the actual price of that equipment, then any sales taxes you have to pay, any freight charges, that is actually the transportation charges you have to pay, or insurance during transit paid by the purchaser. That's something very much important, that when you are taking that equipment from your supplier, or from your seller to your warehouses, or to your own business place. So in this case, you have to see that whether there is a certain kind of insurance, or whether you have to make insurance in order to make the consignment very safe. So in this case, you have to pay the price for the insurance as well. Then expenditure required in assembling, installing, and testing the unit. That's also very important, that expense where you first of all you have to assemble that equipment, then you have to install that equipment or machinery, whatever you are you have purchased, and testing the unit. Testing the unit is that your machinery or your equipment cannot give you perfect unit on the very first output. You have to understand all the things related to that. You have to understand that what amount of raw material you have to put into that, what type of electricity voltage it is using, in all those little minor things you have to consider that while you are working with any kind of machinery or any kind of equipment. So there would be rejected items as well, so that also include your cost. So that is called as testing the unit cost. That is also a cost which is very much important. You have to consider that cost as well. So determining the cost of plant assets. So we can get the idea that how we'll consider the cost of equipment with this example. If you look at the question, as a Hang company purchases factory machinery at a cash price of 5 lakh. Related expenditure are for sales taxes $30,000, insurance during shipping is $5,000, and installation and testing is 10,000. Compute the cost of a machinery. So first of all is the actual cash price. Then that is 5 lakh. We add sale taxes. We'll add insurance during shipment, and installation and testing price. So this will consider this will give us a total cost of 5 lakh 45,000, and this would be the cost which we enter while we are recording the purchase of this machinery. And the journal entry for this plant asset is, when purchase of plant as equipment, is that we will debit equipment for 5 lakh 45,000 and cash for 5 lakh 45,000. Now look into this another example that is related to the purchase of a delivery truck. This question asks us that Huang company purchases a delivery truck. They have purchased a delivery truck, and the cash price of that delivery truck is 4,20,000. The related expenditure for this delivery truck are sales taxes 13,200, painting and lettering expenses 5,000, motor vehicle license 800, and 3-year accidental insurance policy 16,000. So you have to compute the cost of delivery truck. So in this case, we will take only the cash price, the sales taxes, and the painting and lettering expenditure, and we will conclude the cost of delivery truck, because the motor vehicle license is not the part of your cost, and also the 3-year accidental insurance policy is also not included in that. When we were talking about insurance, which cost which is being included in the cost of asset, is when we are taking the product from your seller to your warehouse or to the company. So in this time you will make insurance of the consignment. So that insurance cost is included when you are considering the cost. But over here, this is the accidental insurance. That means in the next 3 years, if you have any kind of accident, so for that you have insured that. So this cost is not included in the cost of your truck, because it's not a cost of truck. Secondly, the motor vehicle license is also not the cost of that. It is actually the license, that your license, that you can drive that motor vehicle. So you cannot you can say this motor vehicle license cost is not included in that. So these two costs should not be included in that. We only consider this cash price, sales taxes, and painting and lettering expenses into this. While when we are making a journal entry, because over here they are asking us to prepare the journal entry, the same question is over here. So over here equipment would be for 4,38,200, license expense is your 800, and prepaid insurance, that is 16,000, and cash is 4,55,000. because you have paid for license, we have paid for prepaid insurance as well, so we have to consider this expenses. Then prepaid insurance is actually prepaid expense, so we have written over here is prepaid insurance. Now at the end of each period, when you will consider the expense of these insurance policies. The journal entry would be like this when we are calculating journal entry for this question.